Yeah, Genesis would be in Roadmap Software. From the last class. Yeah, well, we certainly pay attention to major markets to determine what we're looking for, and the S&P futures and the Nasdaq futures are major futures markets, and they do give us indication. Now, it's one piece. It might be a pretty big piece, but it's still one piece. It's not the only piece. So a few other factors that go in, but when I'm trading, I am definitely watching the S&P, definitely watching the Nasdaq. I'm also watching a few other major markets. The Russell futures, I like to keep track of that because I like to know what the small caps are doing. They're telling a little bit of a different story than the Nasdaq and the S&P this morning. So you need to be aware of that. You need to understand that that's the way the markets are moving. We're aware of outside influence as well. News influence plays a role. So a lot of different factors. We're certainly going to focus you in on the ones that we think are the most important. And there's no question that a lot of what we've seen in this market, really over the past 20 to 30 years, we've been dragged around by the nose by the tech sector. So you certainly do have to pay attention to the NASDAQ. And when you're talking about trading the SPX, that's basically the S&P 500. The E-mini S&P futures are also based on the S&P 500. So paying attention to what the futures are doing, common sense stuff right there. So yes, we've got indicators that we look at. Some of them we feel are more important than others, but all of them have a level of importance. It's just a matter of where the emphasis is. And I think that in the modern market, the emphasis on what's going on in the broader market around the world, the S&P and the NASDAQ are probably the best indicators you've got to determine how global markets are interpreting information. All right, it is about 5 after 10. Let's see, we've got everybody logging in. The amount of people in the room in the past 5 minutes has pretty much doubled, so let me go ahead and ask again. If you guys could give us the weather report, let me know where you're logging in from. And Jonathan has posted up his email for those of you who might have, well, actually, that was specific. Sorry about that. But if you do have any questions, feel free to send in emails and let us know. 61 in Sacramento. That's a great temperature, Frank. If you want to trade places, just call me up. Let me know. I think 61 in Sacramento is more my speed. Okay. All right. Yeah, you're turning your back on feels like 98 in Mobile. All right, I got you. Chicago, pleasant weather, 77. And hey, if you're down by the lakefront, you also have that nice breeze coming through. So that's a little bonus in Chicago. Not necessarily in the winter, but I think it's a little bit of a bonus in the summer months. Gotten cooler in the last couple days. Millie Valley at 57. Or Mill Valley, sorry, Mill Valley at 57. Salt Lake's coming in at 82. I would think that Salt Lake, yeah, or don't you have a decent elevation in Salt Lake? I would think the temperature would be dropping a little bit. 83 in DC. All right. And yeah, so Stacy, you make the point that, watching the recordings would probably be a good way to sort of fit the information in. And I think one of the things that I don't want to say I've discovered it, but certainly, acknowledging that exists, repetition is one of the greatest teachers. The more you go through and cycle through things, the more it sticks in your head, right? So you can go back and re-watch a recording of something you think you learned a lot from, and then you learn more from that, and do it again, and you pick up extra. And repetition is always the greatest teacher, which is why, Tom, you know this, when we're watching numbers in the market, what is one of the key things we look for? Repetition.
Repetition. Absolutely. Anyway, we had an extraordinary class this morning. Uh, who attended that class? Who attended that class that we just did? Any comments that we can share with everybody else?
And we got a whole bunch of people who are moving straight from the SPX class here into train and trade. Extraordinary info, lots of information. Apparently,
Yeah, they
you kind of
ought to
overwhelmed them a
copy
little
and
bit, Tom.
paste this for everybody to see this. This is pretty good. This is real good. Okay. I mean, that's some real good stuff. Yeah, it's what I think, as I told people when I started today in that class, I said, it's the hardest market I ever tried to learn how to trade. Look what Brian said, copy and paste that. He's been trading SPX since 0-day options came out. It's the best strategy that he's ever saw today. Debbie says, if you didn't be there, get in and watch the recording. We're going to do it next week too. Process everything. It was pretty. I think even Jonathan was taken back about what we were able to cover. But let's get into the day. We'll come back to that. But first of all, the market itself got a curveball this morning with the news that came out, and it went down, made new lows over yesterday. And I had the low. I think it was around 54, 64, 54. I think was where the row came or where it came out at. And I think that it was just pretty sudden sell off. They had recovered by the time the cash market. Okay, and anyway, that's important. Thank you for coming again. Our numbers are growing. Keep spreading the word. And get in my T-Buzz TV. I put a lot of good information in there every morning when I kick off my day. TNT had some great information for everybody today. TNT did. Next slide, please. Risk involved in trading. I always talk about risk. Boy, there's risk involved in trading, isn't there? Okay. It's a fact of life. If you take risks, okay, to get a higher reward, you could lose. You got to be aware of that. Past performance is not indicative of future results. In my opinion, everybody here can learn the art of trading. That's why I started this school in 1996. I still believe it today. Everybody can learn the art of trading. But if my in-person classes are coming up, next week I've got a one-on-one with my good friend Peter Blair and his son are coming in. September 22nd, 23rd, I have a futures. October 6th and 7th, have a futures. October 13th, I have an advanced class there. And December 8th and 9th, I have a futures class. So we got a busy schedule to finish out the year. And I think it's pretty exciting to have that, okay? Now let's go through our numbers and see where this market is here on this 14th day of August. Jonathan, okay, you got it updated?
Yeah, Tom, these were updated at 11:02, so about 10 minutes ago. That should be good.
Yeah, pretty good. All right, so the E-mini's telling us to still be long. NASDAQ's telling us to be long. Dow, I'm just going to call out a couple of things. TLT is telling us to be, let me check TLT. I thought it had risen. I got 87.17 open at 87.51. Jonathan, set an alert on TLT at 87.50. If we start getting higher than that, I want to put on another trade for next month on an option spread, okay?
Okay, 87.50.
All right, AMD. A lot of talk about AMD, what they've done right and what they've done wrong, but there's a lot of power in the stock. I'd pay attention to it. NVIDIA is consolidating at 182. Oracle looks like it's got a bid today. Okay. Microsoft is consolidating. MU is just hanging. Meta is corrected from its high. Okay. Meta. Tesla corrected today. A couple of these stocks. Amazon, where's Amazon? I want to cover Amazon, show what Amazon had done. Amazon was one of the early indicators this morning saying, hey, I'm going to new highs. It went to new highs this morning. You know, we've been talking about it being above its 3-day high this week. A couple times in TNT, I've spotlighted it, and it's been good. How about my nuclear stock? CJ looks good. And Palantir, the Wall Street dog, 182. Is that right? Palantir, 182? Let me check. 183. 183. That's NVIDIA's 182. Okay, that's hanging in there. Apple surged to 235 this morning. It's correcting right now. Apple is. Yeah, 231 on Apple. Went 235 earlier. Elan's hanging in there. Now here's a stock. Every day I've been adding to the position. I decided that I'm going to get a full position in ETH. I thought so highly of it. A guy cornered me in the gym this morning on Wall Street. Said, "You got any stocks I can buy?" I said, "I'd go buy this one, ETH, long term." ETH. ADM, I want to trade it. I just hadn't focused on it. Dave's still a short. Uber's a nice one. Cisco. I want to see Cisco get above 72.5. Once it does that, it's going to run. It's going to consolidate, go back and forth a little bit, but I'm going to wait for 72.5. Be patient on that one. Okay. Let me look at CoreWeave real quick. Open a month at 104, high was 115. Boy, CoreWeave fell from grace, hadn't it? Heard the CEO this morning. He had a pretty good story to tell, but the stocks are telling another one. Remember when we traded CoreWeave during Sawgrass, made all that money? Yep, that was CoreWeave. The stock of the week I'd have to call Reddick. I told Jonathan Reddick, I've been watching it now for a solid month. I'm ready to trade it. Monday, Tuesday, and Wednesday. Thursday, look at it, 242. I don't know about you. I'd have to put a little love on Reddit, okay? QQQ. Today, QQQ opened at 580.46. It's currently 580.53. SPY opened at 644, currently 644.5. I'm long NVDW, which is a dividend payer on NVIDIA. I'm long PLTR, which is a weekly payer on Palantir. I'm also long YETH. And I need to get long AMZW. I got to find some money to put in that one, okay? All right, that's where we're at with the tickers. All right, Train and Trade is growing. We're having a great time meeting every day. Let's keep pushing the numbers, and I might do it again in September, okay? Chuck, are you having fun doing this? Jonathan, you having fun doing it? Adam, you having fun doing this Train or Trade?
Having a great time, Tom.
Well, super, that's what I want to hear. How about y'all out there? Y'all want me to keep doing this or not? Okay, Monday through Friday. Easy to remember, isn't it? Show up at 11. Good time, too, if you think about it. If you live in California, you know, you're not getting up at the crack of dawn to be here, right? Okay. All right, today's focus, CPI, PPI, news-driven markets. I laid it out. The pivot number for CPI was 6402. The pivot number for PPI was 6490. The midpoint is 6445. That is the key number of the week, I think, 6445. As long as we're above that, I'll be looking for positive reference bars and ways to dance. Now, are we ready to get into Chuck's, or is it time for me? It's Chuck's time. Folks, you're about to hear from one of the most knowledgeable people I've known in my career. He will get you excited about what he's about to talk about. I can't wait to hear it. Chuck, take it away.
All right, thanks, Tom. And I guess Jonathan's going to continue to work the slides here. A little bit easier that way. So CPI and PPI reports. Now, these are measures of inflation. Important to note here that the FOMC, which is when we talk about inflationary reports, we're always talking about the FOMC, even if indirectly. The FOMC typically looks at the PCE report, which we'll get later this month. We'll probably have a nice little discussion about that one at that point. But this week, the focus is CPI and PPI. CPI is the Consumer Price Index, measures the prices paid by consumers for goods and services. PPI is the Producer Price Index, which measures what producers have to pay. So we put those two things together to understand, number one, what does it cost to produce products? And number two, what are we paying to consume them? So consumption, producer, that's how we go on that one. Let's go ahead and jump over to that next slide. And what we're going to be looking at here, there we go. The opening price at the time of key news acts as pivot point for about the next 72 hours. Now, we do a lot of focus on the FOMC number, which, we got that one a couple weeks back. We'll have another one coming up in mid-September. When we look at the FOMC number, we're saying, okay, so where was the market at the time of the FOMC release versus where is it now? And the last FOMC number was 64.19 quarter, which, if you recall, with this market, that was kind of a big event because we had opened the week right around that level. So getting above 64.19 quarter while the day market opened was a big event for the market. And you can see the reaction here. We made a new high up at 65.0275. All of that you had to get above 64.19 quarter to do. That 64.19 quarter was kind of a key level for the market to rally back to after that drop at the beginning of August. So these big pivot numbers are important. 72 hours, I think it can sometimes be stretched a little bit longer than that, especially if the market wants to use that. Now, we use the same thing when we look at major economic reports like CPI and PPI. We want to know where the market was at the time of the release. What Tom likes to do, he likes to get the number 1 minute before. And the main reason to do that is when you get these releases, if you're looking at, for instance, a stock instead of a market like the S&P or the NASDAQ, those big futures markets, you might have kind of a drop in volume where all of a sudden the next print coming up with the release is significantly away from where it was at the time of the release. So Tom uses that 729 number, or 829 Eastern time for these. When I do historical research, though, I'll tell you, I actually use the release number, especially if it's the S&P, because the volume on that is certainly there. Plus, have any of you ever tried to figure out where the market was trading at 8:29 a.m. Eastern time in January, any given day? That's a little bit tough. 8:30 a.m. Eastern time, I can get that. That's a little bit easier. So from the research standpoint, my numbers might be slightly different than Tom's, but we're looking in the same area, and the area of the market is what's important. So with that 64.19 on the Fed number, and then you go to the open of the week at 64.2275, what I know is the market is in that area. So let's go ahead and move on to our next slide here. After finding the news pivot.
Chuck, I want to make a comment.
Okay, go ahead.
I agree with Chuck because I write it down on the day's action to have it. And I do it that way where I'll have it real at my fingertips. But Chuck's research, when he does his research, the number, I mean, it's a better number that he has. I'm just trying to get an edge on trading. The reason I write it down, I've done it that way for years, but I agree with Chuck. His numbers are the ones you ought to look at sort of after the fact when you're trying to do the analysis.
Yeah, but
Comment.
at the same time, Tom, if you're using this logic to look at AMD, right? AMD doesn't have the same type of active trading early in the morning as these futures markets. So getting that print prior to the reaction, kind of important. So that's the reason for it. There's a reason that we do things the way we do them. Right at the moment is one thing, historical research is another, and they typically are pretty darn close. Okay, so we got CPI, PPI, quick analysis. This is Tom Spin. He mentioned this earlier. He's looking at that 6490, which is where the S&P future where the S&P futures were trading this morning just before the release of the PPI, and 6402 back on Tuesday just before the CPI. Put those two numbers together, and we're doing a little bit of rounding here, but 6490, 6400, that gives you 6445. I tend to be a little bit exact, but that's the area. Okay, so that's the number. If these S&P futures were to drop below that 6450 area, then we've got that 45 number sitting right behind it, and that would be a bad thing for the markets. And guess which number we'd probably be trying to go down to? That would be that FOMC number at 64.19 quarter, and of course the open of this week at 64.22. So if I'm going from 45 to either 22 or 19, yeah, it's pretty much the same numbers, just slightly different at the end result, but you're trading in the same area. So we're going to use these numbers, sort of box the market in and see what we get next. Right now, we're above that 64.45. We peaked above the 64.90, kind of a reaction, maybe a little bit of an overreaction, a retracement of the news move. We're back down now in the S&P. I'm looking at 64.79. So the big deal is we're back below the 64.90. We're above the 64.45. We're above the open of the week. We're above the FOMC number. And the short-term thing is a little bit negative off of the PPI, but the longer-term view is this is still kind of a strong market. We just want to see how this PPI number flows through. So let's see. What's our next slide up here? Next slide is when we get into, the actual table here. You're looking at CPI this year. So we've got the January release. You'll see the release dates in the first column. And it's important to understand that when we look at these releases, the most recent one at the bottom, August 12th, is for the July information. Right, so information could have changed. We're looking at information that is about, well, not quite a month old, but about 2 weeks old. And the other thing I want to remind you of, real quick, before we get into discussing what this really means, this is one single data point, that most recent one. And we're going to get another CPI report before the next FOMC. So if we're looking at CPI and PPI to what the FOMC is likely to do, we don't know yet, right? And we're going to get more data before we get the release of the FOMC in mid-September. So this is one data point. It might set a trend. We're looking at a little bit of a trend in terms of the development of the CPI over the year. But just keep in mind, one single data point does not define an entire structure. So we're going to get more data before we move on. Now with the CPI, we get a couple different numbers, CPI and PPI both. You get the month over month numbers and the year over year numbers, and then you get the core numbers, core CPI month over month, core CPI year over year. The core number here excludes the volatile food and energy sector. Now, we know that over the past year, we've seen about an 11% reduction in the price of crude. So that's the energy factor. So we've got a drop in energy prices, which that alone would explain the difference between core and CPI. There's more to it, but that alone could show you the difference. So look in for December, we were at 2.9 versus 3.2, CPI versus core. Now it's about a 3-point separation, 0.3 separation, and you can see that pretty much holds out throughout most of the year. In the April report for March, it was about a 4-point separation. It spread out even further. The May report for April goes to about a 5-point separation, and then it sort of levels back out 4. And then the report that came out in July, I wonder about that because that got really tight. But then this August report, which was for the July information, gets back to about that 0.4 spread, 2.7 versus 3.1. And what you see is that the numbers were going down, and then they've started to climb back up in terms of the CPI, but in terms of the core, that did happen, but not nearly as drastically. You can see that core number a lot more stable than the CPI number. Why is that stability there? Because it excludes the volatile food and energy sectors. So that's kind of a big thing. And then we look at the S&P prices as we go. Of course, we had that big drop in April. We all saw that 53.86 quarter is where we were at the time of the release back in April. And we've been climbing ever since. So market's trying to push up a little bit. Now, for those of you who don't read tables all that well, I put this in chart format, just focusing on the S&P and the core. So if we can go one more slide, Jonathan, let's take a look at this chart. So again, this is just a charted format. The CPI, core CPI numbers are shown in blue, and you can see the move up at the beginning of the year, down into March, April, and May, and then kicking back up June and July. And you can see how the S&P has been moving here. Seems to be a little bit behind, right? We seem to have the S&P moves, and then we get, like when we see that core being dropped, the S&P was dropping with it, but then the S&P responds. So it's almost like it's a 2-month delay in terms of that inflationary pressure impacting into the expectation of futures markets. So kind of keep that in mind. Or maybe the futures markets are 2 to 3 months ahead of the inflation expectation, because you can see that inflation expectation starting to climb a little bit right now. We'll see what the market does next, but this was leaving off at 6,400 back on August 12th. Again, I'm just going to throw this out there. Below the 64.19 quarter, right, FOMC pivot number, and what we got out of CPI gave people hope because it didn't increase that much. And in fact, the standard rate, not the core, but the standard, stayed flat at 2.7. So let's go ahead and look at PPI. We got that this morning. That's going to be our next slide. We'll look at the table here. And one of the things you might notice is that the numbers for PPI a little bit higher than the numbers for CPI. Now, at some point, producer cost should be pushed onto the consumer. That's the expectation. So a lot of times people think of the PPI as leading the CPI, and to an extent, yes, but it hasn't always been fluid. You look at the PPI year over year numbers, 3.3, 3.5, 3.2, 2.7, 2.4, 2.6. That 2.7, 2.4, 2.6, and even the 2.3 in June almost aligns with that drop down to 2.7 that we saw for these starting in the summer months with the CPI. But I'm always going to look at this and say, okay, what looks different? What looks out of place? The 2.4 read and the 2.3 read on the PPI, that's the number that came out in March and the number that came out in June, look significantly different. And this number here that we get in August, the 3.3 on the PPI, more reflective of where we were in January, and seems to disregard that drop down. Now, when we go over and look at the core, the difference is not quite so drastic as we go throughout the year. Again, excluding food and energy. That's why we get kind of a more stable read. We're moving down 3.5 was the number for December, released in January. You can see it popped up to 3.6, and then it's been dropping 3.4, 3.1, 3.3, 3.1, 3.0, and you had that big drop down to 2.6. Now that big drop down to 2.6 on the core, 2.3 on the normal or on the standard PPI report, that's what gave a lot of people hope that inflation is going away. The 3.7 is probably an overreaction to what could be an overly positive report from June. So we get an overly negative report in July. If we flatten this out and we're closer to that 3.0 that we were in for the report released in June for May, if we're closer to that on the next PPI report, then what you're looking at is just a deviation that is abnormal, different, stands out. So we want to be able to go back to the standard. Now let's look at this in a chart to see what it looks like. That's our next slide. And you see that draw, and I think everybody got excited in June, but maybe got a little bit too excited. So we'll have to see how that plays out. This report that is for July, released in August, bumps back up. And again, like my read on it, it's probably a little bit of an overreaction. And you can see the S&P just steady climbing up. We're getting actually good times for these reports. So we see the market giving that drop in April down to 53.21, but starting to climb back up a little bit now. And 64.8850 is where we were directly at 7:30. We about a minute before we were at 64.90. So looking at some pretty solid information here. Now, Bitcoin's advance predicts an explosion of inflation coming. I think, Glenn, Bitcoin is reacting to the information that you're seeing. So, everything is building off of certain indicators. So Bitcoin, I think, would be an indicator, but it's only one. Now, remember that the Federal Reserve, when they look at inflationary information, they're more looking at PCE, which is a big deal. Do producer wages come into play? Yeah, they do. And in fact, wages is really what jumped things up a little bit here. And let's see. We got a few more slides, but that's, I just want to look back. Okay, that's going to be Tom taking over. Tom, can you give me about 5 minutes? Let me see if I can project.
Take 5 minutes. Very interesting, Chuck. I love the charts that you put together. It really puts into perspective today's report. If you're doing statistics, and can you go back to your numbers real quick before you go, or you already gone away? That's okay.
Well, hang on. What I'm going to do is I'm going to project. And so, yeah, I can bring those numbers up because I have a spreadsheet.
Yeah, because I want to show people the way I look at it. Okay? Take it away.
Okay, so, yeah, this is a spreadsheet that I built that information in. Are you able to see my projection here?
Yeah, I can see it. What I like to do, and I just tell you, anytime I'm looking at stuff like this, I throw out the highest and lowest number over the time span. And then when I throw that out, I sort of get it. I think I see where Chuck is saying it's overdone. Okay.
Yeah, you go back to that 3%. So we had a big drop and then a big climb, overreaction down, overreaction up. Where's the standard? It's closer to 3%.
Yep.
So if we go to Econoday, let me just pop this up in one of my favorite websites. We'll come down here and look at PPI final demand, and they break things down a little bit further. So you can see the PPI month over month, PPI year over year, excluding food and energy. That's what we refer to as the core. So these first four lines are what I showed you in the spreadsheet. Now we come down, we exclude trade services, and that number only at 2.8, which I think is probably a better representation, which is why you saw the market recover a little bit. Come down here to PPI for just services, and this is when we talk about producer wages, right, wages being an issue. That's at 4%. And that is a big number and a big jump from 2.7%. Now, can anybody think of something that might be going on that would maybe raise wages? And listen, don't think political, just think normal calendar stuff. Can you think of why wages might go down or might increase at the end of the summer and maybe even decrease at the beginning of the summer? Now, Bruce, I don't want you to think political. I want you to think calendar. Yeah, the school year, Claire, exactly. Guess what? Teenagers are willing to work for a lot less money than adults. I mean, I don't know how to say it any other way. That's what happens every year. So, and when you look back at the timing of the drop in services and the rise in services, it fits with the calendar. So we can throw political stuff on it if we want to, but the calendar stuff actually holds true. So why go that direction? Let's just stick with what the calendar shows us. So yearly reviews of employees in the school year have to replace kids. Yeah, exactly. So you got, now there's more than one factor, obviously, but the school year is probably what led to this, which means I would expect, and that's the services increase, so I would expect it to get a little bit more in line. But one of the nice things I like about Econoday, I can go back and say, all right, well, what did it look like in July? What were the services like in July? Let's click over to the July report. We know that was 2.7. We saw the previous read. Before that, 3.2. This is when you got the 2.6 number. Let's go back a little bit further and say, okay, well, when the June report came out, all right, 3.2 and 3.0. All right, how about before that in May, 3.3? And notice it went with the prior on that 3.6. So we've been coming down from 3.6 going into the summer months up to 4.0 as we come out of the summer months. So there's actually that pattern that shows this is calendar development. So why does the market bounce back? And let me just go ahead and look at an S&P chart. Why did we drop so hard and then bounce back so high? Now we're leveling off a little bit, but a lot of that bounce back is because you can look at that PPI information and say, a large part of that was driven by an increase in wages as the school year starts to start back up. That might be a temporary fluctuation, right? So we'll look to see a leveling out of that in the next data report. So understanding what the data is, a couple reasons for why it might be that way, and what you would expect to see next, that's part of interpreting the information. So when we look at this market right now, I still think that PPI is a bad report, Tom, but I understand why the market was able to bounce back after the news.
Yeah, and I think there's a couple factors going on that are, right now it's sort of, I don't know if that's a driving report other than the fact, because it comes down to votes, and the votes on the Fed right now have swung and will swing even further. So I think that there are lower interest rates, count on that, which is a big factor for the market to understand. And I think this is, report can be used for talking points and that kind of stuff. But I do think that when we look at things, we got to look at the market itself for the true answer. And the S&P opened the week, like you said, at 64.22. It had a high at 65.02. And if you take the midpoint of the CPI PPI report and this effect on the market, we're above the midpoint of that. So I think we're looking for lower rates. Phelps, I'd look for about a 1.5 over the next year, 1.5 lower.
Well, and
Over.
the other thing, Tom, is that
Oh, one last thing, Chuck. Let me say this.
okay.
In the retail, in the real estate area, you remember how banks do a entry level loan where they cut the rates for 2 years? Y'all remember that? I think the banks will get smart and start juicing the pump if they need to, and you might get a 2-year rate followed by an average rate or whatever. They'll go back to that type lending, I think, especially if they're trying, right now, banks are very profitable not loaning money. And if the interest rates come down, they're going to have to get a little bit creative, okay? So I think that you'll see a lot of that happening in the next 6 months, I think. We'll see.
Yeah, the other thing I wanted to point out, Tom, especially when it comes to the PPI, which is not a great report, what we want to find out, is that an anomaly or is it telling a true story? And we do get another PPI report before we get an FOMC meeting. So I think that there's, cooler heads prevailing a little bit and saying, okay, we need to wait and find out if this is an anomaly. And later this month, we'll get the PCE report, maybe see a little bit clearer picture. We'll find out.
Yeah, and the bottom line is what Chuck is basically saying. Are we in a bull market? Well, it's easy to tell. Where we open the year at? Where we open the month at? You go through the DTI approach, and it's pointing higher. But you're gonna any market, and I call it breeze. Now, if you go look at I posted this in the TNT room this morning. I said, look at the VIX. The VIX would tell a story. If this was something going off the rails, the VIX would have jacked up. If you go look at it, the VIX right now, I'm talking about VIX futures, that's the one I follow. The VIX futures is only up 1.5%, but the number itself is at 15.98. That's definitely below 20. Just give you a comparison. That's definitely bull market territory. So keep your eye on that number, VIX futures, VX/VX. I follow it just about every day. And I just think those are the kind of things that are going on. And you got some price disparities in certain industries. There's no question about that, but you always got that, And so I think it's just hold steady and keep buying the setups. That's the way I'm going to do it until proven different or wrong. All right, Chuck, back to you.
All right, so with the information that I'm looking at, I think that pretty much summarizes it. Listen, this PPI was a bad report. The question at this point, is it indicating a direction or is it an anomaly? And we don't know at this point. There's more information to come. I think the CPI report was a more stable report. So my inclination is to look at that PPI and say it has a large potential of being anomalous, of not fitting the trend, right? So I will say this, though. We look at, it all comes down to the CME. When you look at the Fed watch tool, hang on one second. So when we look at this Fed watch tool, and let me refresh this to get the most recent read.
By the way, this is contained inside links on the roadmap too, real quick access. This is great. This is a great tool. People can predict what they want to do, but you can go right here and see what the odds makers say. So Chuck, what do the odds makers say about the September Fed meeting? What are they going to do?
They're showing a 90.6% likelihood of a cut in rates at a quarter point. Now, if you come down here to the table, you can see that yesterday there was 100% likelihood, but 5.7% likelihood of a half point. Now, this PPI report would suggest that this half point thing, which Scott Bessent floated out earlier this week, might not be on the table. That might be a little bit much, to ask for, at least in September. So they have pulled back from that, but still, we're looking at a month ago, there was a 37% chance that the rates would remain unchanged. Now it's a 9.4% chance. Yesterday it was a 0% chance. So this, again, it's an ongoing developing thing. It changes every day. Prior to the PPI report, 100% chance of a rate cut in September. That came down a little bit, as you would expect, but there's more information coming. There's more stuff going on. So piece by piece, little by little, our understanding doesn't change on a dime. Our understanding is informed by the information we have coming. So we're still waiting for that understanding to be solidified. I think that's the big thing with the CPI and the PPI. Yes, those reports are there. Yes, we are going to get more data before the next FOMC meeting. And yes, this is a developing story.
All right, so let's go back if we can. And I want to analyze the market. It's a sort of an exciting day, I think, for the standpoint market had a sharp decline. We went down to 64.54. And then you had the bounce, and then you had your reference bars. So you had a sell-off. But let me show you something pretty. Can you blow that E-mini up, Chuck? I want to show them what I look at when I look at the E-mini.
Yeah, let me go to a page over here. Let's see. I got the Genesis bar from the previous day framed in here, so you can see how it's still kind of inside that area.
All right, but where's your reference bar 3?
RB3 is this white bar here.
Okay, that white bar. Okay, if you look at the white bar 3, what's the low of that bar, RB3?
64.63 with a high of 64.82.
Yeah, okay. Here in Genesis, you typically correct, clearly the market was on high dollar and it came down. And if you look at it, it looks to me like the market has corrected back to RB3. And what I'd be looking for going forward, looking at that, I would be looking for I gave you a pivot number day of 64.88. 64.88. If it makes it to 88 and goes higher, then I think the market's really going to focus on RB4, which if RB4 is positive, I think we can make new highs today. How you like that prediction?
Yeah, and interestingly enough, the high of the previous half-hour bar, which is about to not be the previous anymore, but that was at 87.50. We're at 88.5, 90 area at the time of the PPI number. So yeah, getting above that area would be very big. I do want to take a look back at RB2 from earlier this morning, which had a high of 88, right? So that is a big area in the market. No wonder Tom was telling us to pay attention to that this morning, and the market's doing the same thing right now.
Yeah, exactly. So, but if you're looking for what's happening this afternoon after the big report, a print in after RB4, which happens between 1:30 and 2, 1:30 and 2, I would expect that maybe you'll see, because you got a lot of, let me tell you what a lot of people do. They're crazy. They do this. I used to do this when I was a young trader, let's say. I'm no longer a young trader, but I'd get short reading the news. News right now is, they're running away. Inflation, all this crap, right? Well, why isn't gold making new highs? That's the question I would ask. Why isn't the VIX making new highs? Basically, it's an opportunity if you pay attention is all I'm saying, okay? And I'll just show you where the opportunity is, okay? But if we get above RB4 as a high, we might have what I call a run to the roses, and that's fun to watch on a day like today. So the time you really want to look at this thing is after 2 o'clock this afternoon, okay? That's what I'll be looking for. And then you got retail sales tomorrow morning, which is a big number also. So analysis-wise, I think that we got, as Deborah said, a lot of chop right now. Just wait around a little bit, or Greg said that. So here's what we're going to do. Chuck, put Amazon in there. I want you to put Amazon in there, in the chart, if you will. Put Amazon, blow it up where they can see it.
All right, let's see.
Amazon, AMZN. Can you make it bigger? What's that high of Amazon?
That high point, that RB3 high was at 230.47.
Yeah. I would think if Amazon after RB4 goes higher, and what's that, 235? Maybe 235.11, we got to play on Amazon. I think if put TQQ in there, TQQ, this is the easiest way to play what I'm talking about. What was the high of TQQ on that bar?
Reference bar 3 high, 95.06.
Yeah, above 95.06 with a positive RB4, you can trade TQQ this afternoon. And that's what I'll be looking for. And if you're in my futures program, I might consider doing a micro E-mini at that same time if I'm in there. Okay? Now, I want to flip back over to the SPX. Chuck, can you put the SPX into the chart? I think it's $SPX for the roadmap. Try $SPX if you get. Oh, there it is. Okay. What's that high up there? That white bar high?
Well, the big high from was that the previous day was 64.80.28. The RB3 high this morning, 64.61.26, and the high of the day today, 64.73.92.
Yeah, I think you can look at the SPX late in the day, RB4 positive. That's probably a confirmation we are going higher. As a confirmation, I wouldn't trade it that way, but I might do maybe an XSP or something like that. Anyway, I wanted to point that out. Folks, let me tell you a story. You might have heard me say this because I think this is very, very important to note. I'm a trader, no doubt about it. I define myself as a trader. I am a trader. And I had a student in for a one-on-one, Fred, okay? And Fred was talking about trading SPX. And he was doing it for the short side. I said, Fred, I wouldn't do it to the short side. Then he told me he understood after he got his hand burned. I said, but I might do it from the long side. For the last month, I've been trying to figure out how to do it. It's one of the hardest markets I've ever traded. It's so fast, it's zero dated. And so I went through so many variations. And I'm talking about, I've got a lot of experience. About 10 days ago, I was to the point to tell Jonathan, there ain't no way I'm going to tell people about this because I can't do what I want to do. Well, anyway, that morning I tried one last attempt and the light bulb went off. And boy, oh boy, it has been something. And so today I taught a class, the master class number 1. We have it recorded. And I think people that were in that class, would y'all type in again what you thought about how valuable what I showed you today was? The reason I'm bringing this up, I've asked Adam to stream last night again. You can get the recording. We have a class next Thursday, okay? You'll get the recording, not from last night, you'll get the recording for the class today if you want. Marge just said, triple valuable. Oh, I agree. John said it was unbelievable. It might be the best class I ever taught when it comes to making money because this is big money if you learn it, okay? Stacy had a lot of questions, Junior, all these people. Are y'all copying and pasting this where everybody can see? Everybody needs to see what they're writing. Okay. So anyway, I've asked Adam to replay it. It's not too late because the interest that's been shown is tremendous. Tremendous, the number of people that have joined me for this class. So I'm going to open it up, watch the tape from last night, and then get that recording. I've got one master class scheduled next Thursday with a special announcement of that class. And well, I'll notice it. So you'll be up to speed if you go through the recording. If you got any questions from today's class, you're new to join, send an email to row@DTI Trader, okay? I think people saw the big picture during that class, and I think people are really pretty excited. So listen to what I said last night, then the delivery. I think when you see the actual lesson itself, if you join, Adam, they'll get it. They'll get access once they sign up, right? Those that didn't sign up, right? Okay, good. All right, so everybody's got the plan. Let's listen to it. Let's make it happen. Join me, because I'm on to something big time here for people that care about big time somethings. Anyway, take a listen. Today, I want to help you master one of the most fundamental skills in the entire stock market. Take a look at that image. Can everybody see that image? I had to look real close. The Dow, NASDAQ, S&P 500. The S&P 500 is huge. S&P is the biggest, most powerful index on the planet. I've been trading the futures for a lot of years, the SPY for a lot of years. SPX is a new, about 2 years old, new thing. 54 trillion in total market cap, about the size of the GDPs of the United States, China, UK, and Canada combined. Huge. It's huge. Without question, S&P is the biggest, most powerful financial instrument in the world. It's critical that you know how to trade it once in a while, not just once in a blue moon, but every single day. I will tell you to follow. What I'm going to teach you, if I had to put a dollar amount on it, it's a lot. It would cost you a lot of money to get where I got to in a month. It is one hard index to trade. Anybody here ever traded SPX? I'm talking about a simple call, simple put. Anybody ever traded it? Bugs is tough, isn't it? Brian, is tough, isn't it? It is one tough market. I'm gonna give you some thoughts. Hope you can be there with me every single day. In fact, if you can't trade SPX, you won't be a successful trader, because you do have to make decisions. You got to prep. You got to have a direction, okay? And you've got to have a plan. I got all that together now. Most traders go wrong. You see, you've probably been told no wisdom about the S&P 500. You can't beat the market. They say the only way you can see the success of the S&P 500 is dump a whole bunch of money in there and wait 10, 20, 30 years, let the long-term trend pay you. But we proved that wrong with what we do. You saw some of that tonight and some of the success that these people are typing in. I think it's hogwash that Wall Street tells people that. They believe it because they want to get your money to some money manager somewhere that he can get a few percentage points. If he's lucky, he gets paid more. Most people don't have that kind of money. A 10% return on 2 million is nice, but what if you only start with 2,000? Think about the small guy growing to 2 million. That's who we're here for. If you're make $200 a year, not much to write home about with inflation where it is these days. If you invested 2,000, the most recent trade I sent my readers on it, ETF, it tracks exactly the S&P 500, $285 payout in one day. That's a year. And then you got to ask yourself this question: would you rather get paid in a day or in a year? I'd rather get paid in a day and come back for more the next day. Now, beating year-long returns for the buy and hold approach by half overnight points to problem number 2 with you can't beat the market thinking. Most people don't have that kind of time. Most people have jobs and doing other things in their life. You know, they maybe taking care of their grandkids or taking care of their kids. Most people don't have the time. If you're 23-year-olds and have 5,000 drop in the S&P 500 for the next 50 years, probably turn into a pretty penny if you reinvest it. But what about folks who are facing retirement in the coming years and need to catch up? Boy, we're growing on my retirement center, aren't we? Fully invested here in August, except for a few shuckles. We're doing pretty good. Or what about working parents and grandparents who need a little extra cash to make ends meet? Anybody here need some extra cash every week to pay the expenses that you think they're off the wall right now, just to live, your utility bill, food bills, all the things that were a lot less years ago have become very expensive, hadn't they? You can't afford to sit around and let your assets turn into expenses. You got to use your assets and grow your assets. With my active approach to trading S&P, I don't think you'll have to. You'll be set up because I'm going to teach you how to do it. You take the same 5,000, put it in my recent trade on XSP, that's a 1,752 payout in just 3 days, right? Now let's be very clear. That's not retire overnight kind of money, but it cuts down on those expenses. Go to the grocery store, it doesn't hurt you so bad. But you just shouldn't quit your day job either. Beats the heck out of waiting 5, 10, or 20 years for the same type returns. You know, I've spent my career, think about this. Since 1983, I have been trading the futures market, indexes, all that stuff over my whole career. I got some experience, round the clock trading. In fact, with the German equivalent of S&P, wanted someone to teach US students how to trade it. A lot of people don't know this about me. I'm in Mobile, Alabama, not in Chicago where everybody's getting the gigs. I'm in Mobile, Alabama. The Germans came to town. They wanted somebody that traded to teach their DAX index. I got hand selected for 2 years. I went around the country introducing the DAX in a class called Dancing with the DAX. Dancing with the DAX. After 2 years in the American markets, the Germans said they're going to spend their resources on institutions. They figured that their index at the time was too big for America to adapt in a broad way. So I took the course I'd put together and I taught it for the next 18 years, Dancing with the DAX. As I told many of those students, exactly what I'm teaching you, you should know. News trades, you got to know about the DAX. Learning to trade the major indexes is the gateway to goals you want to pursue in trading. Now, I stopped teaching some of this years ago, but I still know the executive summary, what you got to know. In fact, classes like that have been reserved for very top students. People have paid over 25 or more. But right now, more important than ever before, markets are moving around like crazy. I believe the bull markets aren't going anywhere. Get involved. Think about your net worth when you start and where you want to be at the end. Set a goal, make it happen. Now's the time to make it happen. Not always this way. We're in what I would call the perfect time to rebuild your net worth in the stock market. So I put together a master class on the SPX and XSP. It's not like any master class you'll ever take or I'll ever do again. It's the only class I've ever taught my whole career about the SPX. I'm going to show you how to trade it. I'm going to give you some rules. I've got it simple. I don't believe in being complicated. A simple call option, a simple put option. We'll set it up. Here's how it will work. Tomorrow at 10 o'clock, I'll kick off part 1 of the master class. Once you get there early, maybe 9:45, but be there in the morning if you're part of this master class. I'll cover the basics of why it's necessary, what you got to know, from concept, how to get the direction, how to make the trade, the prices to take your profits, the prices you're wrong, and the time you are to stay in it. That's tomorrow. Now, what's the difference between the XSP and the SPX? It's a matter of math. The SPX is a big boy. SSP is 1/10 the size. When does it make sense to trade each one? I will explain that tomorrow. There is a time for each of them. That's what this class is going to cover. How can you read the movement of the SPX? I will give you a simple 5-step checklist to get the answer right a minimum of 8 out of 10 times. How valuable would it be to have that directional setup every morning? Tell me if that's valuable to learn that. You tell me. If I can give you 5 things at that time of the morning to look at that will get you right 4 out of 5 times. Who's in for that? I'm going to teach it tomorrow. I've got it. I'm ready to go. How to size your trades and manage the risk. I'll teach that portion of it. And most important, 2 go-to setups for morning trades on SPX and XSP. My publisher already encouraged me to release it for $1,500 or more. I think it's worth more than that. I've never struggled getting down the parameters of an index like this SPX since I've been in the business. But tomorrow morning, I'll teach you to do it. You'll be practicing doing it. Next Thursday, we'll come back and do session 2, where we'll cover the loss portion of how to stay out, when to stay out, real-time SPX and SSP trade walkthroughs with you, live question and answer with my team will be there, and we're going to do a little live trading with me. Now, these 2 sessions could easily be $497 a piece or way more, but basically give you the keys to my best XSP, SPX strategies in 2 intensive master classes. Now, let's make a deal. I'm not going to charge you $5,000, $2,000, $1,000, $500, but I am going to charge you for this. The final price, though, there's one more bonus I want to do. During both sessions, I'll cover one of the powerful new weapons to enter a trader's arsenal in recent years, mastering 0-day expiration options. I'll teach you what you need to know, okay? I've gotten tons and tons of questions in recent months. Yes, I will be taping it, Fred. I'd tape it for you if they wouldn't, because you're the reason I'm doing it. I've got tons and tons of questions about it. It's time to get the answers. I said 0-day options are the most valuable gift traders have been given in years. You know what to do with it. It's the Grim Reaper if you don't know what to do with it. We'll answer all those questions. Again, I'm not going to charge you $500 per class. Both sessions, all the education, for the whole price of $200. Guys, what you're going to learn, we will exceed that after 10 minutes when I give you what I know. But here's the catch. I can only allow 199 students into this class. There's a limit. Only a limit. They started buying it today, so I don't know how many's left, but let me tell you something. It's pretty powerful. So if you want to be one, don't hesitate. Go to dtitrader.com/masterclass or call 904-706-3532. Get your access now. Get your access now. There it is, $199, a 2-part class this Thursday and next Thursday from 10 to 11 prior to our trade class, train and trade. But here it is, 14. Now, who's going to take me up on this? I'm counting down. Let me know if you're going to do this, because I'm putting it out there for you. You tell me you're going to be there. I want to know who's going to be there. Let me know who's going to be there. 10 o'clock, not 9 a.m. $199, a 2-part live training. Plus, I'll give you 5 trades after the 2 classes. How you like that bonus? Okay? 5 trades. Right there. 904-706-3532. Are we at 200 yet? Yes, they will be recorded. Yeah, you can watch the recording. You can watch the recording. Sign up, get in. Monica said, no way you're keeping me out of this class. I just got it. Folks, Frank says he's going to be there. All right. We'll get started at 10, but I'm giving you a little hint. Be there about 15 minutes early. Okay? Dennis, what you have to do, I'll show people tomorrow how to avoid the day trade, okay? I'll show that people that can't day trade, okay, on the SPX, okay? I got it all figured out for you. I'll give you the rules. Remember, 5 steps. How valuable is this? David says, Jeffrey, will you take the time to take my credit card and give me one of the slots? He's begging you to take his credit card. Wait. Be there at 9:45. Don't be late. People know that about me. Don't ever be late. Y'all remember in Sawgrass when people were told to be there at 8? Some people got there at 7:30, and we'd already put a couple trades in the books. Oh, they'll be given throughout the Tuesdays and Thursdays in the month when they set up. Probably take at least a month and a half to get those off on Tuesday and Thursday. You got plenty of time if you want to be part of it. Think about the education. First comes the education, and then comes what you're here for, right? Adam says if you get signed up right now, get signed up. Anybody got any questions? I'm seeing a bunch of people coming on board that filled up the slots. Thank you. Let me tell you, this is not an easy thing. You can listen, you can go on VideoTube and all that, but I'm telling you, this is the real way to trade the SPX and XSP. Yep. DTItrader.com/masterclass, sign up on your phone. That's exactly what I'm saying, Mel. I'll tell you everything I know and how to do it. Now, again, I repeated this phase for many years. If you can tell time, you got to be able to tell time with this one. If you can tell time, you got it, Fred. If you can tell time, I will show you how this works. I got the parameters set up. I told Jonathan, in fact, about 2 weeks ago, I said, Jonathan, I never traded anything so hard to make money with. And then I changed the time of day, and guess what? In love again. Wow. Adam, you better count those. I don't want to exceed 199, okay? That's great.
Well, yeah, I was about to tell you, we were at 30 whenever you asked me the first time, and we've doubled that since then. So they're going quick.
We're on the final 90. Okay. Final 90.
Also a good time to talk about how valuable the gold is, because you get all these kind of things that you do,
Yeah. One of the things that we did today, we made a real push for our gold program. If you put your name, email, and phone number, I'll have Karina, I'll have Kelly and Jeffrey give you a call, you know, because if you like what I do, let's just put it this way. If you like what I do, you'll save yourself a fortune being a gold member. If you like what I do. If you're just kicking the tires with me, maybe it's not time, okay? Okay. David said, if I offer something for $200, it's worth 10x. Thank you, David, for saying that. That's about right, too. Okay, it's good. Anyway, Jeanette, put your name and phone number, and I'll have Kelly call you, or Karina, or Jeffrey. One of them gets it. All right, so what do we got to remember about tonight's session? Market's going higher, right? We got news in the morning at 8:30. Make sure Dr. Jeanette's called Adam, will you? Okay. And be there a little early for this class starting at 10. Okay, a little early. After that news at 8:30 tomorrow. Kelly should be around, SP. Is Kelly here, Jonathan? Or Adam? Chuck? Jim wants to talk. There's another one.
Kelly's here.
Who's here? Is Karina here?
Yeah.
Hey, Dan.
Not sure. I know Kelly and Joe.
Kelly and Jeffro? Okay. They'll call you. Keith says, sign me up, Andraka. That's pretty direct. Stacy said, I just signed up. Adam, I think you hit a chord with this one. They filled up my box, didn't they?
They did.
Yeah, Sam said, when Tom says don't be late, there's a reason. It's about money. Sometimes I see trades early and I'll share them with you. All right, folks, we got a market. It's got to get through the 8:30 time frame tomorrow, which is the news coming out. You don't want to miss Chuck's talk on CPI and PPI. And Bitcoin made a new, y'all, would y'all like to have a stock to put in an account that you can just hold on to and I think be okay with? Huh? Donna wants to be signed up. Would y'all like to have that stock to go with? I got one for you tonight if you want it. I've been adding to it every day. It's called ETH. ETH. I like it, but I like PLTW better. Write that down, ETH. Based on a guy that I think knows a lot about this, that stock should hit about $200 a share over the next few years, okay? ETH. I like it, and I want to tell you about it. It's a buy here in August. It fits my criteria to be a buy, and I think it's going to go. ETH. You know what I like about it? It doesn't jack you around a lot. You know, it just trends. Just trends. Doesn't shake, rattle, and roll as it goes higher.
That's
It's
ETH.
Echo Tango Hotel. What'd you say, Adam?
I was just clarifying the ticker. Yeah.
Okay. Adam, I can't say, I want to thank everybody for having the faith to join me tonight and being there tomorrow. I'm ready to rock and roll. Rock and roll. SPX. Okay. Adam, that's all I got to say. By the way, Adam, the slide presentation tonight was world class. Tell Stephen I said that, okay?
Will do.
You notice I like the size of it too, don't
Yep. He knows what you like.
Yeah, Hunter, hey, Bitcoin just hit a new high. Can you believe that? Goodness gracious. The money's there if you want to educate yourself and find it, folks. Anytime, day or night. I'd get my book, went into day trading game, my book went into trade, Markets Never Sleep, and Trade to Win. Get those 3 books. Anybody ever price out that book for me on Amazon? I was just curious what it's going for. I was shocked last week when somebody told me. I started to buy up a bunch of them myself.
I just bought a few of them last
You did?
week. $8 to $10. Just
It's gone to 30. You tripled your money if you bought last week when I said it was a buy. It's at 30 now. It's going to be about 50 once word gets out that they were giving them away. You bought a bunch last week, Adam? Good. Hey, post a link for my buddy Fred in here, the link for the slides. He needs it.